what are venture capital partners saying about the initial coin offerings? I know you've been to conferences lately. You're really at these conferences. I mean, a lot of people are demanding you. You're flying all over the world. You were sat next to, I think, Tim Draper at one in...
There was the Lisbon Web Summit. I was actually moderating a panel where VCs were talking about their viewpoints on ICOs. And it's really split across the VC community. I mean, there's some of them that are enthusiastically behind it. They see it as the next evolution. These ICOs, in some cases, are starting to replace the entire venture capital, private equity process.
These guys must be sitting there, because 6 months ago, when I spoke to VCs, they were, it's a fad, it's not,
Right.
6 months later, billions have been raised in the space.
So it's adapt or sink, and they're really, some of them are slow to adapt, but the ones who are really going full in, like Draper Associates and Pantera Capital is another example, they are getting in on the pre-ICO. They're getting on the discounted sale. Yeah. And the issuers are making it very attractive to them, because if they can get these big names in with 20 or 30% discount, they've set the momentum for their own retail public ICO. Right. Now look at the VC side. It's also good for them because they have a much earlier exit than they would have had with traditional private equity.
That's true.
And they're also guaranteed somewhat of an exit because they got in at a discount before the public.
Correct. But they're not taking equity. So I think that position, stands testament to the value in a token, because you've got VCs for the first time ever buying tokens instead of equity. They represent no control, none of the normal, classic contractual arrangements that a VC will look for in an investment scenario. So arguably they're taking a very high risk position.
Well, they are, but this is where they're split. I mean, some of them will have to adjust their investment charters to allow for investing in non-equity instruments. But the split really is in the view that they see for the future. So on the one hand, they're willing to invest in the protocol utility tokens enthusiastically. They have rigid criteria, though, so they won't just do it blanket for anyone. The offering has to meet certain criteria.
For example, do you have an example?
They'll do a test on whether or not it's a true protocol token, so that it's not just used as a loyalty.
A utility and a security.
Right. No, utility versus security. So they want it to be something that can survive on its own in a foundation beyond just the initial issuer. And a loyalty token doesn't do that. A loyalty token is probably the weakest type of issuance.
Yeah.
So they do analyze it on that, and they're very rigid. Now, the other side though is looking at it as only doing ICOs as registered securities. So they're looking at it as bypassing NASDAQ and all the traditional IPO routes, but you still do the registration.
Yeah, but you're independent from the system. Right. You're independent from the system. So from that regard, there's much more control. You could set market conditions. You have the ramp is within your grasp, bringing something onto the platform, getting a security token out there. We've seen a couple of security tokens. Science did one recently. I think Blockchain Capital did one. And they haven't been phenomenally successful. And there are a number of reasons for that, from what I can see. So the exchanges that operate the utilities currently are essentially unregulated themselves. So if they were to accept a security token onto a utility exchange, they obviously need to be regulated. Mm-hmm. So there is actually no distribution channels. I know we're in discussion with Gibraltar. Gibraltar are looking at a regulated securities exchange. That might be the first. Apparently March is the time they might release. But launching any exchanges is no mean feat, right? So
a lot of the
March sounds like a lot
of the token exchanges are actually self-regulating, and they're kicking off the ones that they think are really resembling a security.
They're really good at it. Because the SEC's trail of sieving through the good and the bad eggs, right? The people who are genuinely trying to do something and do it right. There is no law written to it, so They're self-regulating. I mean, they really look closely at the legal parameters in which they should be operating and operating within them. I know we are here because we're a regulated company. We do not want to fall foul of any global regulatory position.
And the market's still going to sort all this out in valuation. So it is caveat emptor. You have to do your research. Pushing the burden of individual research for their own investments, I think, is a good thing.
Yeah.
You don't want to become lazy in your investments because you say, oh, well, it's regulated and they've already handled it all. You should be doing your own due diligence and your own research.
Yeah.
And that's why I say that the market's ultimately going to sort this out. If there's a crappy loyalty token, it's just not going to go anywhere.
It's going to crash and burn.
Not everyone is going to win.
Yeah, there is a degree of intelligence in this market, which I really enjoy. It's like craziness, but intelligence. And because of that, you get this momentum, right?
Market driven.
It's market driven. I think the next 3 months is going to really see, after Christmas, with the amount of ICOs, some are just going to fall off a cliff and just not go anywhere. A lot of them are. I think what is the hit rate now? That 60-70% of ICOs are just not hitting anywhere, even their soft cap, which basically means the investor is smart.
Well, let's talk about the next quarter, because you brought that up. I mean, it is going to be an interesting quarter, Q1 2018, because a lot of the ICOs that were planned for fourth quarter have postponed it and pushed it out to the next quarter because of the forks, because of the uncertainty in what we saw happening in the market during October and November. That's pushed a lot of them out. So if you think there's a lot supply on the market now, you haven't seen anything until you get to Q1, where there's going to be a lot of supply on the market. But there's also going to be a lot of demand. And there's going to be
a lot of money, right? There's what, 500 billion now in available. So
half a trillion crypto.
Every time you do an ICO, that is your audience. That is the money you're looking for, right? 500 billion. So the next quarter. The fight is harder, the competition is fierce, but the opportunities are there.
Absolutely.
The means are there. If you do it right and you execute right and you persuade these intelligent investors, you abide by the law, you've got a great product, you're real, then you cross the line, right?
Well, and the other thing is the investments in the blockchain space, the general blockchain crypto space, have already surpassed the investments from the VC world, the traditional private equity world, in 2017.
Correct.
And so we expect that to continue into 2018.
No, the numbers are staggering.
And we're also seeing investments that are ICOs that are not just from blockchain-related companies. And this is another interesting trend.
Yeah, how do you feel about that?
Is where you start doing pharmaceuticals, you start getting into other industry verticals that are having their own ICO issuance, and they're only using the blockchain and the ERC-20 protocol for pure fundraising.
So this German company did an IPO and is now doing an ICO. And I am slightly dubious of companies that are coming in that already have sort of, critical mainstream, placement in the economy.
Well, it's like, why would they need?
Yeah, why do they need to do it? Well, your company's just an IPO, and why an ICO?
They're tired of selling equity.
And they argue that it's a token-based system, and it's a token-based cross-platform opportunity. Right. But I'm just, unless you built a product from the ground up, which, like HIP, had intentional use of, the public ledger, looking at smart contracts to, enforce investor-owner relations, and have transparency in the system, abilities to move money around. It feels a bit like it's crowbarring in. But are you seeing companies that are doing this that makes sense? That the mainstream should be adopting an old business practice into a new practice? Perhaps that's the story, right?
Well, I think
it's the evolution of old into new.
If they're doing it with the intention of reducing the reliance on trusted third parties and intermediaries, I can see how it makes sense. I haven't seen any specifically in pharmaceuticals that would make sense in drug discovery areas.
Yeah, I know. How would that work? Right?
I don't know.
unless they want to publish their intellectual property rights to the blockchain, so we can all benefit from it. Wouldn't that be marvelous, right? We can all create our own Viagra free of charge.
But the ones that do make sense though are in supply chain management area. Supply chain management is another low-hanging fruit. So they kind of cross over into the blockchain space because they're legacy companies, enterprise supply management integration. They need to do that transition anyway. And if they don't do that transition, they're going to have their lunch eaten by the young upstarts anyway.
This is true. This is true. And they're in the space. They're investing in it.
And these guys are going to be coming after HIP as well.
Yeah.
These big legacy guys.
I better get a shake on them, right? Let's roll out.